First, they lost their insurance, then fire destroyed their homes. That's the reality facing thousands in LA as wildfires, as we just saw, continue to rage. The unfolding insurance catastrophe there exposing a worldwide crisis that could spell disaster here.
The LA fires are an absolute tragedy for those directly affected in LA, but they're a tragedy for people here in Australia who are struggling with the cost of living.
Lives upended, homes destroyed.
This is my house, and nothing prepares you for this amount of destruction.
Thousands uninsured.
They have no fire insurance.
For years, insurers have been pulling out of California as the effects of climate change ramp up.
These insurance people decided to cancel their fire.
Since 2023, 7 of the state's 12 biggest insurance companies have limited, paused or dropped nearly 3 million policies.
Getting fire insurance has been really difficult.
LA's insurance catastrophe laying bare a global insurance crisis.
It doesn't matter whether people believe in climate change or not. What matters is the insurance companies know that their payouts have gone through the roof and the insurance companies are going to increase people's premium. That's just the way it works.
A new report finding the fires in LA are likely to push insurance premiums higher here, where 15% of Aussie households are already under extreme insurance stress.
All the insurance companies are actually linked, and accidents in one part of the world lead to higher premiums in other parts of the world. No matter where in the world the disasters are, we share a slice of the cost.
And the results can be catastrophic.
Still shattered by it all. It's still hard to come to terms with what's happened.
In July, Vicky and her husband Stuart cancelled their contents insurance after their annual home and contents premium jumped from $1,800 to $6,000 in the wake of intense fire and floods in the Goulburn Valley in northern Victoria.
It was the only thing we could do to be able to live. Yeah, with the prices of everything else going up.
Just 6 months later, on Christmas Day, their home caught fire.
We could see massive clouds of smoke. The house was fully alit, flames everywhere. It was horrifying.
So in a country increasingly ravaged by wildfires and floods, will Vicky and Stuart's nightmare become a reality, shared by countless more Australians?
Paula Jarzabkowski is an expert in global insurance and joins us now. Paula, why would fires on the other side of the world impact us here?
Now, the problem is that it's the same global capital market that pays for large-scale disasters everywhere in the world. That's called the reinsurance market, and it's insurance of insurance companies. So normally the premiums of the many pay for the losses of the few. When we've got the losses of the many, it's that global market that pays to make people good. That market's taken quite a beating year on year over the last few years, including from our floods in 2022. And it's going to take quite a beating now from these LA fires. And that means the cost of capital, reinsurance capital, to all insurers around the world will go up. And they'll have to charge that on to their policyholders. And they'll also have to retain more of the risk on their own balance sheet, which will come at a cost to them. So that comes at a cost to us.
These premiums are going up a huge amount. How much of that is actually literally the price of risk? That's just what it's costing insurance companies, and so they have to put the premiums up by this amount. And how much of this is insurance companies being opportunistic about this and just getting cream off the top?
Yeah, look, I can tell you that premium pricing is a complex thing. So premium pricing is made up of everything from what you expect the future reconstruction costs to be in an inflationary market. So after a disaster, costs of reconstruction go up. And then it's also what will the future cost of capital be, which is what the reinsurance market will charge. And then, of course, it is a market. It is also beholden to shareholders. So I wouldn't call that opportunism. I'd call that's the way capitalism and markets work. And they do need and are regulated to cover those costs. And, something that you might do to your house to fix one aspect of it actually might make it more expensive to rebuild it another way. So I think we need to move beyond trying to find a scapegoat that way to trying to find out what we can do to make things better for homeowners.
So, Paula, because you know more about insurance than anyone on this desk, how would you fix the insurance market?
So the first thing is at the moment we do full indemnity insurance. your house is harmed and you get it rebuilt exactly the same as it was. Maybe we need to start looking at some different kind of cash product that will get you back on your feet, but it'll be less expensive because it doesn't fully rebuild like for like in an inflationary market. So that's one thing. Should we change how we understand insurance? The other thing is I do think we need some sort of government industry interaction on how can we get those prices down, how can we spread the risk across all the disasters. So, yep, government intervention, never a popular one. And thirdly, we need to have some really serious discussions about resilience. So, how should houses be built? Who's responsible for risk mitigation? And we're all in that. Homeowners, local governments, state governments. How do we get that risk down so that we have less losses in the first place? After all, you don't want money to make you good after you lost your house. You want to not lose your house in the first place.
Hey, Paula, you make insurance sound really interesting.
It is, trust me.
Thanks so much.
Thanks for having me.